What is your mortgage payment? Today, I'm going to be breaking down the 4 or 5 main components of a mortgage payment because it's important for you to account for each and every one of them when you're budgeting for a home purchase, and because it's what a lender is going to look at and use to qualify you based on your debt to income ratios. So the main acronym that we use is called PITI, and I added an A there in parentheses because that doesn't always play a role, but I'll let you know when it does. PITIA, principal, interest, taxes, insurance, association dues. Principal, it's the original amount borrowed, repaid on a monthly basis. Interest, cost of borrowing the loan based on the interest rate. Taxes, obviously this is going to be the property taxes that you pay to your city and or government agencies. Insurance, this will be homeowners insurance and potentially mortgage insurance depending on the loan program and your down payment percentage. Association dues. So again, this is the part that may or may not always be in your mortgage payment. It's going to depend on if you're buying a condo with a homeowners association, or really it's just any property that has a homeowners association, an HOA with monthly dues. So that's the main portion. That's really the breakdown of a payment. I want to show you an example where we can see some simulated payments here. So in this case, we're looking at a conventional loan scenario with 10% down, 2 different purchase prices, $500,000 and $1 million. We're looking at the same rate here just for, again, educational purposes and not giving us the ability to compare. This is not an actual rate offering. So here is our total payment based on a 30-year fixed loan. Obviously, they're very different since we have different loan amounts. $39.41 for the $500,000 purchase price and $7,582 for the $1 million purchase price. Now, the good thing about this analysis is that I can show you a payment breakdown by clicking on this More Info button, and we are able to see what our payment is made up of. So the payment that you saw on the first screen will be in this orange row down here at the bottom, and the breakdown is obviously up above. So here we have our principal and interest payments respectively. This is, again, monthly, a combination of principal and interest, and that is your fixed payment there. Property taxes will be assessed depending on the property value, and this is an estimate. We usually estimate about 1.25% here, but again, it'll depend on your county tax rate and really your tax rate area. So this is simulated for this purchase price. And then we have here what's called hazard insurance, which is just another term for homeowners insurance. So if you see those, they're interchangeable there. Again, we're estimating probably about 0.25% of the property value, and that is then compared to a monthly number. And so that's an estimate there. And here we do have mortgage insurance since we are at a 10% down loan in a conventional loan program here, showing what a likely monthly mortgage insurance could be. And all those factors will add up to this monthly payment, which again is not your total, this monthly payment right there. But one thing you need to make sure you consider, and especially when you're considering qualifying for a loan, is that you add in any HOA dues or association dues, and that's the A in the PITIA. So simulating around $300, assuming it's a condo or just whatever the HOA is charging monthly. Again, this is just a simulation of what it could be, breakdown of what the parts are, and again, the main point of this is so you can look at the different components in a mortgage payment and account for it appropriately. Cool. So if you have any questions on this, please reach out as always, like, comment, subscribe. And if you want to see your own personalized analysis, feel free to reach out as well. All right. Thank you, everyone.